Despite all of the volatility that we've seen in the market over the last month, Alibaba's stock price has shot up by over 23%. And there's been some key catalysts that have hit the market in the last few weeks that have caused this move up in the stock price. One of those being the situation around tariffs, and another being DeepSeek and what it means for AI within China. But ultimately, investors will want to see a material impact on companies' earnings around these two catalysts. And Alibaba specifically has set a date of reporting their Q4 earnings of February 20th. So we will be going over all of this and more in today's video. And if you enjoy it, make sure to drop a like down below. It really helps the channel out, helps it continue to grow, and helps promote this video out there for more people to see. I really do appreciate it. Thank you guys so much for continuing to watch and support the channel. And if you want to see more videos like this one, don't forget to subscribe. If you're completely new to the channel, one of the things I take a lot of pride in is being fully transparent with you guys about the positions that I hold in the market and the moves that I'm making. And today is a very exciting day because the YouTube portfolio has officially broken $60,000. And if that wasn't exciting enough, we now have our first ever 10 bagger. A 10 bagger is a stock that has gone up over 1,000% from where you bought it at. And that is none other than Palantir. We also hold positions in Alibaba, Google, Apple, Microsoft, PayPal, SoFi, Super Microcomputer, and Visa. Our newest add to the portfolio has been Super Microcomputer. We currently hold 200 shares, and we're actually up on this position now after it's made a large move in the last few days. We're up over 13%. And with the recent sell-off that we've seen from some larger tech companies, I'm looking to potentially add to my positions in Google and Microsoft. If we see these stocks continue to dip, that's when I'll be looking to be a net buyer of these two companies. Google is one of the lower valuation companies in the Meg 7, and Microsoft overall has had very poor performance in the last year or so. I don't think that's going to continue into the future. I think both of these companies, especially if they continue to drop a little bit further, would be very interesting buys. On top of those individual stock positions, I also hold two dividend ETFs, SHD and VYM, and these actually make up the majority of the portfolio, sitting at a market value of $29,500. However, I would much rather have this money in individual stocks. If we see a major dip in the market, what I will likely do is sell out of SCHD and bring that money into cash and deploy it into individual stocks. The company we're going to be talking about today is Alibaba, and if you look at this portfolio, it appears that I only hold 15 shares of Alibaba, but again, in full transparency, I want to make sure you understand that my position is much larger than this. I have about $20,000 in another portfolio of Alibaba alone. And right now, this position in this portfolio is up around 34%. In my other portfolio, it's up a little bit less than that. In the last month, Alibaba has been a very interesting stock to watch. It's up almost 24%. And over the last year, the stock price has increased by over 45%. However, one thing to keep in mind for investors is we have seen numerous times in the last couple of years, the stock price reach this $100 to $120 price range. And each and every time, it seems to fall back into that range of around $85 per share. However, if you're bullish on Alibaba like I am, you believe that at some point in the future, the stock is going to shoot above this $120 mark and be able to sustain prices that are much higher than the current levels. And the question really is, what is the catalyst that is going to cause this sustained move up? We thought it was going to be the stimulus that China was putting into their economy. However, more recently, we are seeing this move up in Alibaba's stock price due to the tariffs that Trump has put on China. Originally, during Trump's campaigning, he was talking about 60% tariffs on China. However, today, we're seeing a number of 10% on imports from China. This is obviously much lower than the original 60% number that Trump was talking about. And overall, this has been seen as a good thing for China and Chinese companies. The other big catalyst for Alibaba and China in general has been the recent news around DeepSeek. As long as you haven't been living under a rock, you know what has happened with DeepSeek and the AI that they have been able to develop. One thing that came out more recently is this rumor around Alibaba actually investing into DeepSeek. One of their executives came out in the last couple of days and actually said that this is untrue. They are not investing into DeepSeek at this time. However, despite this lack of investment into DeepSeek, they are still a major catalyst for the Chinese economy in general and any Chinese companies. Because what DeepSeek has been able to prove is that you don't need the highest powered chips to be competitive in AI. And what that allows companies like Alibaba to do is be able to produce technology that can still have massive impacts on their business and utilize AI even though there are restrictions that are put in place by the US to prevent them from getting the most powerful chips. And this is a market that Alibaba is already competing in. They have already produced their own AI technology that is supposedly even more advanced than DeepSeek's technology. However, that's what every company is really claiming at this point. They're all trying to outdo each other. At the end of the day, what really matters is how this AI technology is actually integrated with their existing business. And I think Alibaba is one of the #1 players in terms of how they can actually integrate AI technology to have a meaningful business impact. And the most obvious way that Alibaba can utilize AI technology is through chatbots. We've seen chatbots pop up all over the place and people using them for fun prompts. However, in the long term, if Alibaba is able to implement chatbots that are able to bridge language barriers, that would be huge for the company, because right now they are producing goods in China and selling them throughout the world. That means they have a lot of different languages that are needing to be known, and obviously that can create some language barriers between suppliers. So ultimately, if they can actually bridge this gap using AI, that would be huge for the company in the long term on increasing conversions for their customers. And if they're able to do this, this will obviously have a major impact on the company's financials. Right now, they are set to report their next earnings on February 20th, and they are estimated to come through with EPS numbers of $2.70 and revenue of $38.24 billion. And this would be a record in terms of quarterly revenue. The previous high was achieved back in 2021 when they hit $38.06 billion of revenue in a single quarter. And overall, Alibaba has actually seen some strong revenue numbers in the last couple of quarters. And because of the strength they have seen in the last couple of quarters, they are now sitting very close to an all-time high in terms of trailing 12-month revenue. They're sitting at $134.4 billion for the trailing 12-month period. This is just below the trailing 12-month record that they achieved back in March of 2022 of $134.56 billion. However, the only thing disappointing about $38 billion of top-line revenue is the fact that year over year, that would be growth of only 5 to 6%. And that would be down from the September quarter where they grew their top line by around 9%. And we previously have seen Alibaba grow their top line numbers consistently by double digits. However, over 2021 and 2020, we saw a huge pull forward in demand where the revenue grew by 101% in a single quarter, and that was a massive increase. I don't think that's going to be realistic anymore. However, if they can get back to top line growth of 15 to 20%, that would be a huge move in the right direction. But the other aspect of all of this is we need to see those numbers translate to stronger bottom line numbers as well, because in 2019 all the way through till 2021, we saw EPS for the trailing 12-month period sit anywhere from $7 to $9 per share. However, more recently, that has been cut almost in half to $4.97 for the trailing 12-month period. The good thing is that analysts do expect this to turn around in the next couple of years, because the EPS in 2024 was around $8.54. In 2025, it's expected to be basically flat, $8.63. However, in 2026, the average EPS estimate is $9.73. So they're expecting a substantial jump up from 2025 to 2026 in terms of bottom line numbers. And personally, I think that not only are they going to see strong growth in 2026 on their bottom line, I think they'll also see this translate to stronger top line numbers. I believe that Alibaba is going to get back to growth around 15 to 20% on their top line and bottom line numbers overall. And what that ultimately leads to is valuation expansion. Right now, the PE ratio for Alibaba on the forward basis is sitting at 10.73. And in my opinion, that valuation is incredibly low for a company like Alibaba. Yes, if they continue to underperform and they only put up around $6.79 of EPS in 2026, that could be a PE ratio of around a 15, and maybe that is fair for the company. That would mean that the stock price is basically trading at a fair value currently. However, if they come through with inline numbers around $8.63 cents, I don't see a reason why they couldn't trade in line with the S&P 500 anywhere between a 20 to 25 PE ratio, which would put their price anywhere from $170 per share to $215 per share. But if they outperform and they come through with strong top line and bottom line growth, we're talking about double digits, 15 to 20% growth on both their top and bottom line numbers, that would result in EPS numbers around $9.57. At that point, again, I don't see why this company couldn't trade in line with the NASDAQ. That could be anywhere from a 25 to 35 PE ratio, which would result in a stock price anywhere from $240 per share to $335 per share. In my opinion, what is most realistic for Alibaba is somewhere around that $170 per share mark. That could be two different scenarios, right? We could see underperformance where they come through with lower EPS numbers, however, they trade at a higher valuation that's more in line with the market. Or they could come through with inline numbers, and what that could be is a lower PE ratio compared to the S&P 500, closer to a 20 forward PE. Either way, that would result in somewhere around $170 per share, which is still very strong upside from the current stock price. But keep in mind that I do hold shares of this company because I am bullish on the stock price, and I think that the company overall has a very strong and fundamental moat in China that they should capitalize on over the next couple of years as the Chinese economy turns around. So don't buy a stock just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. Thank you guys so much for the continued support. If you did enjoy this one, make sure to drop a like down below and subscribe for more videos like this one. And as always, have a wonderful rest of your day. And for the joke of the day, how do you make an egg roll? Check the comments down below for the answer. Thanks for watching.